Welcome everyone to today's webinar. What do you
It's not.
mean by a profit and loss account, and why is it important to understand and know your key profit drivers? I'm your host, Linda Carrington, and we've got our Managing Director with us, Graham Potts. Graham's going to be explaining what's in a profit and loss account and also exploring some key profit drivers and their impact on your business. We'll take questions as we go, pop them in the comments, and we'll try and pick them up. Graham, let's get right into it. What is a profit and loss account, and why is it crucial for business owners to understand this?
Thanks, Linda, and welcome everybody. A profit and loss account, sometimes referred to as an income statement, is a financial statement that reveals your business's sales or turnover or income, less all its costs and expenses, and ultimately its profitability over a specific period of time, whether that's 1 month, 3 months, a year. But it's crucial for business owners to understand what is in a profit and loss account and what's not, as it provides financial insights into the health of the business and helps totally with decision making.
Yeah, absolutely. So let's break down the structure of a profit and loss account. I'm just going to bring one up on screen for you to run through. Let's go for it.
Right. Okay. So this is sort of like a typical. It's just an example. It hasn't got everything in there. It's just an example. So what we've got is we've got a business that's turning over $1 million, with million sterling here. Now, what comes first is your direct costs or your cost of sales. And that is the cost of actually producing the income. So for instance, you could have something like in construction, it's an operative, someone on site who's doing the work. In manufacturing, it's someone on the production line. In consultancy, it's someone who's providing the consultancy.
Yep.
So what we put in there are things like direct costs, direct labor. And that includes, I put all the on costs, and by on costs, we mean national insurance, pension, sort of holidays, any other costs. And it could be, sort of their tools, it could be the vans, it could be anything that's related to that labor. Then we've got materials or products for sale, and that's after stock movement. And I put stock movement there because you might say, for instance, you bought in a year £300,000 worth of materials, but you still got 100,000 in stock. That will go to the balance sheet, which we will discuss next time.
Yep.
The materials that's actually been used in the business is in the actual period goes to the profit and loss.
Sure.
Then we have things like transport, carriage, duties of getting those materials. Equipment hire, for instance, could be you've hired like a construction site, you've hired forklifts or something. Could be equipment that you're using in a business that's like manufacturing, that's producing a machine that you've got on hire to produce the product. And we've also put in sales commissions. Now, sales commissions I'm looking more like for third-party websites. So like Amazon, eBay, things like that, where you've got a cost of the commission as against the sale. And these figures, we just put them in there, but obviously depending on the type of business you are, we'll tell you what type of costs you have against it. But generally, the simple way to remember it is they're variable. They're usually variable costs. Whereas then we move down to the overheads. But before the overheads, I'll just say gross profit. We'll come back to that in a minute, but that is one of the key profit drivers to understand the gross profit of your business, which is your direct costs or your indirect costs. Your direct costs or your cost of sales as against the turnover.
Yeah.
Then we take off usually items that are mostly fixed, like overheads. So that's like advertising and marketing, because that's concurring anyway. It doesn't matter what the volume of sales are. Premises costs, sort of rent, rates, utilities, your office costs, motor. But for motor, I just include the staff there, a staff that's actually to do with the salaries that's below that. And those salaries are usually sort of administrations, salespeople, etc.
Management,
yes. Then we got professional fees, finance costs. Just seen that actually one of the things we haven't got there is depreciation, and depreciation could be in both. Because if it's depreciation to do with the office, it'll go in overheads. But if it's depreciation to do with something that's involved in working in sort of producing the income, then it'll usually go into direct costs. So you can split it.
Yeah.
Take a breath for a minute.
That's right.
And then we get at the end, we get the profit and loss. But the key thing here, that is before tax and dividends.
Yeah.
And that is key, because people look, if they're given a profit and loss account, they're usually given the figure there that's 150,000, and they think, woohoo, we've made a lot of money, we can spend some money.
Sure.
But they don't take into account that they're going to have to pay corporation tax at the end of the year. For this, because it's now in marginal rate, we've used an effective rate of about 22%, because it's between 19 and 25.
Yep.
And then also, especially small business owners, they forget the dividends. So if, for instance, a small business owner is being paid the bare minimum salary, usually around 12,600, and takes some money out in dividends, now those dividends really are part of the salary package.
Yes.
And if they don't take them out, they'll be looking at 150,000 instead of 42, which is the net figure in this instance. And they might go and say, I can afford to buy so-and-so, which actually the profit doesn't tell you whether you can afford to buy something. It just tells you how the business is doing, and you should look at it against trends for previous years and where you think it's going to go in the future.
Yeah. Okay. So that's a whirlwind tour there, Graham. Thank you. So how can business owners use the P&L account and the profit and loss account to their advantage?
Well, they can use it, like I said, tracking performance is key. Identifying trends, so they can make informed decisions. It's also used, obviously, for attracting investors and lenders. They want to know what your real profit and loss account, is. Mentioned it so many times, Dragon's Den. What's your numbers? What's your margin? Which we've talked about before, etc. It's a valuable tool to understand the health of your business. And it's really understanding what you need to know. Now, it's also used by others, such as banks or other lenders, or people that, if you're looking for investment, they will look at your business and they want to understand these figures.
Yeah. So it's really important that business owners themselves understand them and aren't afraid to ask their accountant questions if they look at it and think, well, how did you come to that? That doesn't make sense to me.
Exactly. They've got to understand the key numbers. Not saying that they have to understand everything, but they have to understand what's in a profit and loss, and like I said, what's in a balance sheet, and we'll come to a balance sheet in the next session.
Definitely. And earlier you mentioned identifying key profit drivers. So can you explain what those are and why they're important?
Right. Key profit drivers are the factors that have the most significant impact on your profitability. They could be related to many things, but examples might be like mix of sales mix, pricing differences in different markets. Like for different types of customer, you might price differently for maybe smaller jobs than larger jobs. Also, it's used for like cost control, but there are different ones. But it is so vital that you find what's the right ones for you in your business, because it enables you to understand what really drives your business. Where's the profits coming from? And sometimes where actually you can get, sometimes where there's a part of the business or part of the customer group or market that's not doing so well, not performing well. And you don't understand why turnover's going up, but profits aren't. So it really helps you drive your profit and make you successful.
So how do you go about determining what your key profit drivers are?
It often is. It's involving analysing historic data, and as I've said, predominantly different sales areas. Like customer groups, markets, products, services, locations. Maybe sort of looking at the different types. Like sort of different values. For instance, the large projects as against the smaller ones, and it's matching your true direct cost to these sales. And overheads if you can, but that's the most important thing, is to do it with your direct costs, the indirect costs, the ones we went through before, your direct labor, materials, etc.
Those
So
figures,
you can work out. Sorry, Linda.
those figures that can change.
The ones that can change. So you can work out what is actually making money and what's not. And actually, it's surprising when you actually split things out. People get really surprised about what's really making money and what's not.
Yeah, that's it. So can you give us some examples of some common key performance drivers?
Yeah, like I said, sort of like sales volume is one.
Mm-hmm.
What happens if I drop a price down a little bit, but increase sales? What does that have effect on, sort of the bottom line, sort of the direct gross profit? And that can also happen with, like, do I use a website? Do I sales through my website or sales through something like Amazon or eBay, etc.?
Yeah.
Pricing strategies, you may, we've identified before that sometimes, like, if you're got a mix and you've got sort of sales that the individual sale can be anything from a few hundred to hundreds of thousands, you would price differently. And understanding like those that you wouldn't price and put the same markup on each. You would actually get more profit for the small one. You mark it up more because as the price goes up, the scrutiny of your margin gets more intense. And it's increasing, it's getting a real imbalance on your pricing. We've gone through this so many times, and it's also customer retention, discounts given. It could be like, you see it when, like, Amazon, oh, you could have had this, this, and this, and this. What's your strategy with these things? How can you get more from your customers? So it affects everything. And it really does have a significant impact on profitability. I think it's, think of a tap, right? Okay, so you've got a tap, right? And we've all had this point where we've had a leaking tap that you can't switch it off. The more you tighten, it still leaks. That's a leaky tap or a leaky bucket. It's leaking out of your business. What you want is when you turn that tap on, it turns on and it doesn't just dribble, it turns on and it flows, so actually it comes out fast. That's what we're talking about. That's what you're doing with your business. You're making sure your taps you turn on actually flow right, they don't leak.
Yeah, that's a good analogy. And how you've also talked about gross profit margin, Graham. How do the profit drivers affect the gross profit margin?
Well, I've been through quite a bit of this anyway, like I said, but it's, if you can increase sales volume without increasing the cost of goods sold, obviously your gross profit margin will improve. So it's understanding, how, it's really understanding where your high margin customers are.
Yeah.
What services or products really where, for instance, take an accountancy firm, like us. You won't make, when you get to the added value is in the consultancy, and that's where the prices goes up. If you can add more, if you can, save a client thousands of pounds, it's worth a lot more than just doing the bookkeeping.
Yes.
It's the same in your business. It really is to actually the added value and trying to get that margin up, which increases profits massively.
Do you want to run through an example, Graham, of how business owners can improve their gross margin by understanding and using those drivers?
Certainly. Let's say a retail business. You could look at negotiating, for instance, better terms with suppliers. If you're struggling for cash, maybe you basically could get 60 days. If you're not struggling for cash, you might be able to, and you've got space, you might get a massive discount if you can pay pretty promptly. So it's understanding that with your cash and profit balance. You can also look at having a pricing a strategy that increases sales volume without the sacrificing the margin. Like I've mentioned before, the website, for instance, if you can get more, if you're having, say, 10, 20, 30% taken off you as commission, but you could get it at the full rate on a website, that's going to give you massively more profits. The problem is that we all know that these third-party, portals, where you put your products on, obviously have got a massive wider audience.
Yes.
And we've discussed pricing, strategies and margin analysis in previous webinars. But let's take another example. A labor intensive sector like manufacturing, sort of construction, maintenance, monitoring your wage ratio is important. So if you think, let's take a construction site, that your labor, or a trade and construction, your labor is at, say, 30% of sales. If you can monitor that, because often the problems come is that productivity of this drops and you don't know why, and it happens so late. You only
Yeah.
see after you think, I've not made any money on this project. Why?
Yeah.
If
Yeah.
you're
No point
looking at,
at the end, is there? You've got to look
no
at
good
it.
look at the end, it's gone. The horse is gone. It's bolted.
Yeah.
As through the project, set the projects up and make sure that you're monitoring it as it goes through. Another one might be material wastages or price increases. It's monitoring these and how you deal with it. Because often people don't, they're so involved in the day-to-day, they're not actually standing back and looking at the numbers in the business.
Yeah, definitely. I've popped the link on screen to the previous webinars that we've run, you've mentioned today, Graham. How often should people be looking at these key profit drivers?
Profit drivers, those as well.
I was nearly on KPIs for a minute.
Yeah, well, it's basically, you should be, it depends on the size of the business.
Yep.
If you're a one-man band, you're probably on top of it anyway, but you should be, you're not going to be reviewing it every minute, every day, sort of thing.
Yeah.
And it depends on the type of business. You find that like retail, they'll be monitoring, they'll set systems up to be monitoring it all the time. But it's an ongoing process, and it's up to you with your business, the size of business, the type of industry you're in. But it's setting up with anything, it's setting it up right to start with, so that you can review, and you're getting the big exception reports coming through.
Yeah.
Basically, you should continuously assess the effectiveness of your pricing, your costs, and monitor market changes, and adapt as need to be to stay competitive, but also to make sure you're making that money.
Yeah, no, absolutely. What are the practical tips for business owners to help them track and monitor their key performance drivers?
Well, I mean, we use Xero as a accountancy firm, and basically you've got tracking in there that you can use, go down to 2 levels, but that involves setting clear performance requirements. What you after, for instance, if you're in a business that has 3 locations, you split it by 3 locations, but then you may want to split it by different types of sale or different types of product or whatever. So that's important. Vital is getting the account system, as information goes in the account system, it's the right account system, obviously, but it also is entered correctly, because if you want to track it properly, you have to get the information going in correctly. Like, for instance, we use something like decks, and you can set up decks where you've got, for those things, we could set it up as per location and as per product. So when the costs go in and the income, you can see where it's coming, so you can break it down. The old, computer adage, rubbish in, rubbish out, but setting it up and thinking about what information you want is key. And once you've got that working and confident, then regularly reviewing the results and making adjustments where necessary. I mean, optimizing.
That's key, isn't it, Graham? The regularly reviewing bit, because so often, even in sort of, businesses that are employing a number of people are just concentrating on plugging the numbers in and aren't always doing anything with them until it's quite
that's
late
it.
on.
I had so many times that I got a lot of business owners do not understand accounts. They want their accountant to talk to them, but the accountant thinks they understand a little bit, but they don't.
Yeah.
Don't be afraid to ask, and if you don't understand, keep on asking. I don't understand. Don't be afraid. The majority of business owners do not understand, and accountants talk a different language. So
and have not been taught either, and that's the reality, isn't it? So why should business owners embrace their profit and loss account and really focus on identifying those key profit drivers in their business?
Well, understanding your profit and loss account and the key profit drivers is crucial because it empowers you to make the right decisions and directly increase your profitability. This approach helps businesses not only thrive, but you stay competitive in this market. I think it's also I like to talk because I don't know how many people listening here would have understand or done economics, but there's something called the supply demand curve. And when you've got a lot of demand and not enough supply, which what happened after COVID, and we basically material and everything went through the roof, cars, everything, houses, right? Basically, the price goes up, and you can make a lot of money. Now, when the opposite happens, and house prices have, things are stalled, coming down, that's because supply is over demand. And if you have a look at it, I monitor Rightmove, and I would say that the houses coming on the market 2 years ago compared to now, it's chalk and cheese. Whereas I would hardly get anything coming on the profile set. Now I'm getting 20 to 30 per day and a lot of reduction. So it's a supply and demand. This understand your key profit drivers makes you understand, it helps you understand when things happen, when the supply demand curve gets out of balance. It goes one way and then another. And that's what happens. It goes like this.
It helps you be responsive, doesn't it? You can
It does.
tweak
It
up
really does.
prices or squeezing costs or vice versa at the appropriate time.
Yeah. And as we said, it's understanding profit and loss, but it's also understanding, your balance sheet is vital.
Yeah.
Absolutely vital.
Yes. Well, thank you, Graham, for sharing those insights today. And it's clear that by understanding the profit and loss account and knowing what's driving your profitability, business owners can definitely take control of their business and their success. So I hope that the discussion has shed some light on the profit and loss account for our audience today. And if you'd like further help in understanding your P&L and especially on how to generate more profit in your business, then get in touch with Graham. I've popped our email on the screen there. Chat with Graham at westsatescommercial.com. Graham is ready to have a free one-to-one conversation with you. Next time, and you mentioned balance sheets, we're going to be decoding your balance sheets. We'll be helping to understand cut-off. And that sounds like accountant speak that I hope we're going to be translating really well for people, and how that affects the balance sheet, and also how the balance sheet is a measure of the financial health of the business. So I look forward to seeing you then. Join us on Monday, the 5th of February at 12:30. Thanks, everyone.
Thank you.